Hey traders, on to the next subtopic. Now, price structure, lower lows, lower highs, etc. Now, I've gone through candlestick recognition first because you're going to have to spend some time on that. All right, you're going to have to start looking at the monthly candles, weekly candles, daily candles in conjunction with your key levels in order to predict a potential bias for the next month, week, or day. Now, price structure, lower lows, lower highs, and so on. I'm going to go into this now. I'm going to just give you a brief lowdown on which time frames are actually most efficient. So this in the book, Swing or Trend Trading, on page 15. Uptrend, trend that moves upwards. Downtrend, trend that moves down, obviously. Sideways, trend or consolidation, we're going sideways. Now in the book, here we go. I put some higher highs, higher lows, higher highs, higher lows. Now I'm just going to go into further detail on how we actually spot these higher highs and higher lows, okay, and clear a few things up. Now, let's get back to the charts. So Euro USD may not be the best example to go for at the minute, but I'll go to a lower time frame. So on the monthly time frame on Euro USD, let's have a look. Now, if we look back here in 2002 onwards, we could potentially say that's a higher high, that's a higher low, here's a higher high, here's a higher low, here's a higher high, here's a higher low, higher high, and so on. We can to an extent. I don't personally like to use the monthly time frame because it can lag a little bit. But what I'm actually looking for over here is, see these two candlesticks that obviously are making this peak. If I just highlight that zone, I'm highlighting this zone here, that's actually a tweezer top, 1, 2, which is in the book. Tweezer top formation, candlestick formation. So guys, putting it straight and blunt now, the ways in which you're gonna spot on the charts higher highs, higher lows, lower highs and lower lows is in fact by using your candlestick formations. Other than the candlestick formations, you can use the 3-pin pattern, which carves out a higher high and higher low, which I'll go into in a minute. But there's a tweezer top. What do we have here? We have a bullish engulfing. Boom. 1, 2. That's a bullish engulfing formation. Zoom in there. So we have the tweezer top. Markets came back down. Bullish engulfing. We've seen a new leg up. Over here we have, because I wouldn't really classify that as a shooting star, to be honest. If the body was a little bit longer, I would class it as a shooting star. It just feels to me that the wick here is slightly too long in conjunction with the actual body. If this was a little bit longer, think about it, it would be becoming a spinning top, an indecisive candle. This one's definitely a doji over here, okay? But this is a 3-pin pattern. Okay, so the 3-pin pattern is when there's 3 candles and we're focusing on the wicks. All right, so the middle candle, the secondary candle out of the 3, the wick of that candle has to be higher than the first one. So what I mean by that is I can see this here. All right, let me just snap down. So at top of this doji, we can see the wick here is clearly higher than the prior wick. Okay, so we have 1, 2, and then the next candle 3. So basically what we're doing in effect on a lower time frame is we made this pattern. Come back down. And now this is a monthly time frame, remember? Okay, so what we've more or less done on a smaller time frame, taking this into consideration, is that's what we've done here. So this peak there is in fact the peak of this doji if we went to a smaller time frame. If I pull this up in the book, so we have the higher high, higher low, higher high. Bull trends start to an end. I'm sorry about the fuzzy image. I'm not sure why it comes up quite fuzzy on this example, guys, but it shouldn't do in your book. It should be nice and crisp. So more or less, okay, as you can see, we've gone from making higher highs, higher lows, down to making lower highs and lower lows. So it's a trend reversal. So that's what the 3-pin pattern is all about. So we can see it here. We just have to look for the 3 wicks. So we've got the middle one, we've got the one on the left-hand side, so middle, left, and then we have the one here on the right-hand side, which is this shoulder here. So on a smaller time frame, we've gone from bullish now to bearish. So bullish now to bearish. Hopefully you get that concept. I can't really explain it in any clearer way or straightforward way, but we'll get there as we go along. Now over here, we could class this as a tweezer bottom as well. So this Over here, as you can see the wicks. Now with the tweezer bottom formation, this one's relatively perfect because you can see wick are more or less the same, right? Over here, you can see the wick of the second green candle is slightly higher than the wick of the red candle, the red body candle. It's not too far away, so I would class this as a tweezer top. Something like this where the wicks are obviously blatantly too far away, that is not a tweezer top or tweezer bottom. So this is a tweezer bottom, it's carving out the bottom, tweezer top, as you can see there. So what's actually happening there is 1 month we spiked up, second month we've had a go, and this goes for all time frames as well, and the market just could not surpass that level. So there's 2 rejections, which makes it a pretty strong zone, ready for a potential reversal, which did come through afterwards. So we have the higher highs, higher lows. Now here is a higher high, and what can we see here, guys? Let's focus on the wicks again. 1, 2, 3. So we have this pattern once again over here. So if I draw it out again, markets come up. Okay, it's pulled back a little bit on the smaller time frame. It's gone back up to make the middle high, and then it's come down. Excuse my drawing, and then it's come back up to make the right shoulder, if you will. And then from the right shoulder, it's gone on to make a, see here, boom, 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 and it's gone. So it's gone from making higher highs, higher lows, higher highs, to completing the pattern once more in order to show us that the market is now reversing. Over here we have another one. We have 1, 2, 3 carving out the bottom, So more or less what we're using. Okay, I hope you're still following me here. I'm going to be going through this time and time again on all of the charts going forward. So what we're actually using to define our swing points, okay, and this is actually a warm-up into the key levels. I'm going to be drilling your head shortly with these patterns and formations. What I'm trying to get to is that we're using these patterns as potentials for swing points. So here on the Euro USD, this is the current range, which has been in for quite some time. So if we just box off this range, we have wick, wick, wick. There we go. There's a carved out potential higher low. So after this here, this is a hammer formation as well. This is obviously a doji. Got the shooting star, which didn't really follow through because we had some massive support along here, which you'll see once we start to plot these levels on. So again, we have to be mindful of what barriers are above and below us. So we have 1, 2, 3. So after this monthly candlestick, remember we're still on a monthly time frame, we've seen, oh shit, we are potentially making a bottom here. And as you can see, the month has followed through: August, July, June, July, August. So we've had the 1, 2, 3. And we can enter off these as well. We're going to be entering off all the candlestick formations. We're going to be entering from the 3-pin pattern formation. So let me break it down on smaller time frames. There's a little bit of an introduction there. So weekly, this has been really difficult on the weekly. Okay, as you can see, this is just a mess. The resistance level across here, 1.4450, has proved to be quite a barrier for some time now on the Euro USD, but potentially it could be ready to break soon on the Euro because the market can only consolidate for a period of time. And what's actually happening here, the Euro is just indecisive. If we look at the overall structure, okay, if I zoom out a little bit, this was the decline on Euro. We can see a shooting star up here, and we've just absolutely melted. Giving you an insight into the moving average indicators here, we can see the crossover, and where it's crossed over, it stayed spread open, converged for quite some time. So throughout this period over here, remember these are all weekly candlesticks. It's just been bearish, sell. There's no sign of reversal here. But again, the moving averages are giving us an insight as to what trend we're in. And I'm going to get into that in a couple of videos forward from now. The moving averages are, as you can see, consolidating sideways, overlapping each other. And now they are potentially getting ready to cross the blue one, maybe crossing the red one. So we're looking at the blue one more or less. That's the most responsive. So once that blue one crosses the red, it will give me an insight and a kickstart as to potentially Euro USD may be ready to blast straight through that resistance and so on. Okay, nothing's 100%, but it's given me an early insight. Now, if I can just take those indicators, the moving average indicators off that, if I just go down to the daily time frame here, what I can actually see is a refined viewpoint of the price action. All right, so this is an extremely difficult chart, because we have been going sideways. In a sideways market, you're not going to really see any lower highs, higher lows. So let's just see what we can do here. So over here we have a tweezer bottom. Okay, over here we have the 3-pin formation, 1, 2, 3, and also not just that, but we have a bearish engulfing. See this red one here is a bearish engulfing. It's engulfing the prior green candle. And we also have the 3-pin pattern, 1, 2, 3. As you can see, Euro USD has declined, quite a deep pullback. And over here, what do we see again? 1, 2, 3. So we have the doji in the middle, little doji on the left, and then we've had the bullish candle here. So it's carving out the bottom. That is a higher low. That's a higher low. That's a higher high. That's a higher low. We're expecting new higher highs to be formed, which it did in a very, very choppy manner, but it did. So what I'm trying to do here, guys, is give you an insight into this price structure which I'm going through. It's very, very simple if you know about it. Many people tend to discredit it and disregard it because they get so fixated on indicators and so on. Now, that's just a little bit of an example there. Let me see if I can find a better chart for me to go through. Let me pull up the Aussie dollar recently. I haven't really looked at this in a while. Choppy as well. I had some choppy price action recently. Okay, so over here on the Aussie, this is a key level of resistance, 7750s. All right, and you're going to have these key levels drawn on later. And if you don't have key levels drawn on accurately, everything else falls out of place. All right, so everything will be, if I just show you the higher highs and so on this GBP USD chart. So higher highs, so we've got the 1, 2, 3 pattern there, and this is also a shooting star, rounded top. And then around here, there isn't really any pattern bar from 1, 2, 3 again. This was triggered by some FOMC data, that's why it's a little bit of a volatile candle, but it's still a 1, 2, 3 pattern. We've gone in to make highs, and we've gone sideways for a bit here. We've pulled back again, and we've seen a tweezer bottom. It's not just a tweezer bottom, it's a bullish engulfing. So that candlestick formation, because some candlesticks will hold characteristics of others, has actually formed a new higher low. So we've gone from creating, let's have a look at this over here. We've gone from lower low, lower high, 1, 2, 3. That's also a bearish engulfing. Okay, here we have a new lower low. It's slightly off a tweezer bottom, as you can see. The red candlestick wick is slightly off base with the green one, but it is bullish engulfing. So we have the lower low, lower high, 3 pattern, lower low. Then we have a lower high, 3 pattern again, 1, 2, 3. It's all about the wicks. What's actually happened on lower time frame? I've just explained it. It's making a reversal. We also have the bearish engulfing to confirm that as well. Gone on to make new lows, highs. This was triggered off news as well. Can't remember off the top of my head which news it was, but boom, we've came through with a bearish engulfing. It's made new lows. We have a pattern 1, 2, 3. Doji spinning tops, the market's indecisive. So what's actually going on behind the scenes is the market is very, very intelligent. It's clever. It knows when it's accumulating positions, i.e. drawing people in. It knows when it needs to rest. And it knows, okay, when it's going to make a new lower low or lower high. There's a 75% chance that after this confirmed higher low here, a higher high is going to be formed, and the market may even just pop its head above literally the wick of this candle here, because that's the official higher high. It's all about the wicks, guys. That's the last higher low. So GBP USD, just as a baseline, even without any of the key levels on there or anything like that, we can say, okay, cool. Just by reading the raw price action, GBP USD is looking to come up from current price 1.3140, say, and just maybe breach 1.3180. Then what it can do, it might pull back again, make a new higher low around here before shooting off again. That's why we have to be careful and read the candlesticks, wait for candlesticks to close. Or it can say, oh, fuck that, I'm going to make a new low and reverse. Okay, and we can spot the reversal around here. So it's candlesticks, 3-pin pattern, time and time again. And what I like to do, guys, I'm going to put this into another video, okay, is go ahead and on the weekly time frame, we want to look for this pattern as well. If we can't see it on the weekly, we can step down to the daily. Sorry, I've got a little bit of mess on this chart. I'm not sure why any of this is there. Let me just remove that. So on the weekly time frame, if you can't spot any and it's not really clear, some currencies it will be, some it won't be. So this is the daily time frame. So the price is, so after Brexit, the price has been trapped. So I've got my monthly key levels, round numbers, 3,500. All right, and then got my monthly support, 1.3. So got 1.3 there, as you can see, we're back above that level now, got weekly resistance there as well, and the blue levels are in fact my daily and the 4 hours key levels, which I'll get into soon. But just quickly, structure, we're looking at 1, 2, 3, that's a 3-pin pattern there on the daily, and it's also an evening star, which is in the book. Here we have a tweed at the top, very, very efficient and effective. So that has carved out a lower high. Here we have 1, 2, 3, right at resistance, so we have lower swing high. Lower swing high. Not all the time, especially on the weekly and the daily, will it immediately go and make new lows, but it gives us an insight as to which trend we are in overall. So the weekly, it's great to look at that, and what I would like to do is maybe circle these, which I'll leave for another video. But look at the daily as an overall structure, and then we go down to the 4 hour. 4 hour is also great for this. So you can see now on the 4 hour we have lower swing, lower swing, lower swing. But after this lower swing, see the price here, it didn't actually make new lows. The official lows are down here and here. It didn't make new lows. So it could be now that GBP is in reversal phase. So we could start to make, so we've gone from making lower lows, lower highs, lower lows, to now making higher highs, higher lows, higher highs, higher lows, and reversing. It's how the market works. Okay. So just keep that in mind. We need to learn our candlesticks and practice the 3-pin formation. We can enter trades directly from these as well. So we can maybe go long after this bullish engulfing right here. Stop losses 15 to 30 pips below. I'll get into this shortly. And then the 3-pin pattern, we can also enter off that. So let's say over here, we've got 1, 2, 3. We would enter short after this breakout, this reversal. 1, 2, 3, boom. And actually, this actual setup right there, which I'm explaining, you're going to see that, I can't remember which video it is, it's one of the first 5 in the trade example videos where I've actually made some money off this. And I'll show you this later on as to why I've entered the trade. So that's just an introduction into price, mapping out the higher highs, higher lows, and just looking at the trend in general. So weekly is important, monthly is good, but again, it can lag. Weekly is important. If you can't see anything on the weekly, daily and the 4 hour are where you need to more or less focus on. I'll give you a full breakdown later on as to how I will go about mapping out maybe the last 2 or 3 pieces of price structure to give me an idea as to where the price is going next. Hope you enjoyed that video. On to the next one.